Okay, so we've had quite a bit of material come in from you all about consumer credit, borrowing, that whole world.
It's definitely a hot topic.
Right. So let's dive into something really foundational there. The Truth in Lending Act, TILA for short.
Ah, yes. TILA, super important. Passed way back 1968.
That's the one. And its goal was pretty straightforward, really. Bring some transparency to credit deals.
Exactly. Because before that, things could get, well, murky.
Totally. So if you're thinking about a credit card, maybe a car loan, financing furniture, whatever, understanding TILA is like your baseline protection.
It really is.
Yeah.
Before TILA, comparing offers was, frankly, a nightmare. Lenders could highlight one thing, maybe a low payment.
But hide other stuff.
Precisely. Bury fees use confusing language. You might have one loan with a low monthly cost but huge fees, another slightly higher payment but clean terms. How do you choose?
Yeah, tricky. So TILA forced a standard approach.
That's the core of it. Clear
Yeah.
disclosure. Before you sign anything, the lender has to give you standardized info in writing.
Okay, like what specifically? What are the must-haves?
Key things. The annual percentage rate, the APR. That's the big one. The yearly cost, including fees.
Right, the real cost of borrowing.
Then the total finance charges. That's all the interest, all the fees, everything you pay on top of the loan amount itself.
Okay.
And related to that, the total amount you'll actually pay back over the entire loan term. Plus your payment schedule, when payments are due, how many there are.
And seeing all that together, that's where the light bulb goes on, I guess.
Exactly. That low monthly payment might look tempting on its own.
Sure.
But then you see the APR is high or the total finance charge is massive because the loan term is really long. TL makes them show you that whole picture up front.
Got it. Now, I remember reading something about a right to cancel. Is that part of TILA too?
It is, yeah, but it's specific. It's not for every single type of credit. The big one is for certain loans secured by your home, like a home equity loan or HELOC.
Okay, so for this,
You typically get a 3-day cooling off period after you sign the papers.
3 days to just change your mind.
Yep. You can cancel the whole deal, no penalty, no questions asked usually.
Wow, that's actually a pretty powerful protection, isn't it? Especially when your house is on the line.
Oh, absolutely. It gives you that crucial pause to review everything again, maybe talk it over, make sure you didn't feel pressured into it. A real safeguard.
Makes sense. What about the scary stuff? Like fraud. Someone getting your card details.
TILA covers that too. For credit cards specifically. If your card is lost or stolen, your maximum liability for unauthorized charges is generally limited.
Limited.
Usually just $50.
Okay, that's manageable.
And importantly, if you report the card lost or stolen before any fraudulent charges happen, you often have zero liability. Many card issuers even offer $0 liability policies anyway, going beyond the law.
Good to know. So let's say you're looking at loan documents and something feels off. Like maybe they haven't been clear or the numbers don't seem right according to TILA. What do you do?
First step, contact the lender. But crucially, do it in writing.
Not just a phone call?
A phone call is fine to start, maybe, but follow up in writing. Email or a letter. Outline exactly what your concern is, which terms you think weren't disclosed clearly, and ask for clarification. You need that paper trail.
Right, documentation. And if they blow you off or the answer isn't good enough?
Then your next step is usually filing a complaint. The main agency for this is the Consumer Financial Protection Bureau, the CFPB.
Okay.
They handle complaints about financial products and services and can investigate potential violations.
And if it's more serious, like you've actually lost money because of a violation?
In that situation, especially if the financial harm is significant, it's probably wise to consult with a consumer rights attorney.
Get legal advice.
Yeah. They can tell you if you have a case and what your options might be for recovering damages.
So really the whole point of TILA boils down to empowerment through information, doesn't it?
That's a great way to put it. Knowledge is power here. It helps you compare apples to apples, spot potentially predatory practices, and just generally make smarter choices with credit.
Avoid those nasty surprises down the road.
Exactly. Which I suppose leads to a final thought for everyone listening.
Yeah.
Just, next time you're looking at any kind of credit, it could be a store card, could be a mortgage, actively think about these TILA rights. Are you really seeing the full picture up front? The APR, the total cost. Does it all make sense? Applying that lens consciously.
Right.
Well, that puts you in the driver's seat.
If this podcast helped you, don't forget to like, comment, and subscribe. Your support helps us keep making these videos. Thanks for watching.